Hey guys, welcome back. My name is Adam from The Fifth Person, and in this video, we're going to find out why the stock market keeps rising over the long term. So if you take a look at the chart of the stock market over the long term, and this is the S&P 500, it just keeps going up. And this is despite all the many crises that you see. So despite World War I, World War II, the oil crisis, the dot-com bubble, and even the 2008 financial crisis, and recently COVID-19, it still just keeps going up. And the question is why? And this is not just true for the US. It's the same in China, in Germany, in the United Kingdom, in India, in Canada, and South Korea. So all these major economies, the stock market just keeps going up over the long term. And the question is why? Why does the stock market just keep rising over the long term? And the first reason is because of inflation. So inflation is basically prices just becoming more expensive over time, the prices of your goods and services. And this is supposed to go up very steadily over the long term. Now, the thing is, when prices go up, so does the revenue and the profit of the companies that sell you those products and services. And if the profit and the revenue goes up, the company becomes more valuable, and that translates to a higher stock price. So a lot of the growth that you see in the stock index is also down to inflationary growth. So this is the US Consumer Price Index from 1920s until recently. As you can see, inflation has slowly and steadily risen over time, and the Consumer Price Index has gone up. And the one thing about being an investor is that you get to ride along with inflation. So as inflation goes up, the price of your assets increases as well. But as a saver, if you're just holding on to cash, your spending power comes down. So it just pays to be an investor versus a saver over the long term because of inflation. Now, this is only true if it's because of creeping inflation. So you want to have inflation at 1 to 3%. So this allows the economy to grow very steadily over the long term. So because if there's creeping inflation, you know that prices will be slightly higher the next year or the year after. You're motivated to spend, all right? As compared to a deflationary environment where things become cheaper, right? But again, too much inflation is too much, all right? So if prices are going up and it becomes very unstable and volatile, it makes the economy very unstable, and it's very hard for a business or a stock market to do well if there's too much inflation. Now, the second reason is because of population growth. This is quite straightforward. As there are more people around the world and the larger markets, the more people that companies can sell to, the more valuable they become. And as of right now, we have about 7.8 billion people in the world, and this is expected to hit 11 billion people by 2100. All right, so there's a lot of people, and as markets grow, so do the size of companies that serve these markets, and it's not slowing down anytime soon. Now, the other advantage of having more people is that you get to have more specialized economies and industries. So for example, if you just have a primary industry, you deal with like mining, forestry, and farming. But as the population grows and becomes bigger, you have more specialized industries pop up, like retail, financial services, media, communication, and so on and so forth. So if the population grows and there's more economic activity, that just translates to more growth and for the companies over the long term as well. Now, the third reason is because of technology. So, technology has really taken off in the last century or so, as you can see over the chart over here. And the thing about technology is that it builds on one another. It's an exponential growth, all right? So for example, when we started with industrialization and steam engine, this was the first time in human history that we didn't have to rely on human or animal power to move things, and we could rely on machines to do the work for us. So this started off the industrialization age, all right? So because of the steam engine, that led to the railroad, which opened up new frontiers. And then once you had the light bulb, that allowed us to work into the night, which extended our productive hours as well. And then very recently, of course, in the last 30 to 50 years, we have the microchip, which has really changed the way we live our life and the way the world is today. So this is like a meta invention that has allowed many other inventions to be built upon this one meta invention. All right, so because of the microchip, we now have computers, the internet, and smartphones. So today, you can have your kid, your child, hold on to a phone and access the vast majority of all the human knowledge that we know out there just right there on the internet, right in the palm of your hands. And this was just unfeasible 15 years ago. So this is the power of technology, and this opened up new ways of economic growth, of how you can expand companies because of new ideas and new technology. And who knows where we could go in the future, and explore new frontiers in the future. Who knows where the horizon is. And the fourth reason is because of natural selection. So if you take a look at the S&P 500, it's made up of 500 companies, right? So the top 10 companies in the S&P 500 today are these 10 companies. So you have Apple, Microsoft, Amazon, Alphabet, Tesla, Facebook, Berkshire, JP Morgan, Johnson & Johnson, and Visa. So these take up about 27% of the S&P 500. But the thing is, the S&P 500 doesn't stay the same all the time. Over the years, this will change. So as you can see on this chart, the average lifespan for a company to remain S&P 500 is actually coming down because the shift in technology and the way our economy changes is just accelerating as well. So if you take a look at the top 5 components on the S&P 500 today in 2021, you have these big companies. But just 20 years ago, you had these 5 companies instead. You had General Electric, ExxonMobil, Pfizer, Citigroup, and Cisco. So these are very different companies from the S&P 500 just 20 years ago. So 20 years from now, do we know which companies are going to be the top 5, top 10 in the S&P 500? We don't know, but it really doesn't matter because they're going to be on the S&P 500 anyway. So the market as a whole will always have the best companies within the index, and that's why the index still tends to rise over the long term. Now, the question is, do all markets rise? The thing is, if you take a look at Japan, they've gone through something called the lost decade. But this lost decade has gone for like 30 years, okay? From 1990 until all the way to today, in a way. So they've suffered from, low population growth, a deflationary environment. And, Japan was home to the Walkman and the Shinkansen, but recently they haven't really, come with really new innovations that have changed the world, compared to the US, which launched the information age due to the computers and the internet. And, Japan hasn't really grown over the last 30 years. And because of that, if you take a look at the Nikkei 225, it's basically remained flat during that period. And 30 years is a long time. So not every market will grow. They need to have a confluence of factors of population, economic activity, and innovation that allows a country and an economy to grow steadily over the long term. So how does this affect you as an investor? You can invest in the stock market index if you want to invest passively in the stock market as a whole. Okay, so take a look at the SPDR S&P 500 ETF. If you take a look at the growth since its inception since 1993 until today, the growth is about 10.04% over the last, about 30 years. All right, and it's pretty good. Annualized returns 10.04%. So there's one strategy to simply invest in the entire stock market and just hold on to the market as it grows over the long term. But of course, once again, you have to select the right index to invest in. So we want to make sure that there's very mild inflation, creeping inflation of 1 to 3% per annum. There's population growth, there's technology and innovation in the economy, and of course, the index will have natural selection over time. All right, I hope you learned something from this video and why the stock market just keeps rising over the long term. So if you learned something and you like this video, feel free to hit the like button, subscribe to our channel with many more videos coming up for you. And once again, thank you for watching, and I'll see you again.